focus. Ideate, innovate, enable. Nucleus Software presents CNBC-TV18 Banking Transformation Summit in association with SPAN Communications.
Welcome to Nucleus Software presents CNBC-TV18 Banking Transformation Summit. I'm your host, Mugdha Kalra. In a world of perpetual change where innovation shapes destinies and ideas reshape industries, the banking sector emerges as a pivotal force in shaping the narrative of India's economic growth. Today, we stand on the cusp of a transformative era where aspirations converge with opportunities, and the banking industry plays a catalytic role in propelling India towards the monumental goal of a $5 trillion economy. And now, ladies and gentlemen, to set the tone for the evening, may I please invite CNBC-TV18's Managing Editor, Shireen Bhan, to deliver the welcome address.
Very much, Mugdha. Good evening, ladies and gentlemen. It's so lovely to see all of you here at the first inaugural edition of the CNBC-TV18 Banking Transformation Summit. On behalf of my colleague Lata Venkatesh and myself, thank you so much to each and every one of you for joining us here this evening. As you're well aware, from the 9 a.m. cutoff for high-value checks to now being able to transfer your money from your smartphone, the possibility of buying a ticket for the Louvre in France through a made-in-India Fintech platform with real-time conversion of the rupee to a foreign currency, banking transformation is an undeniable reality, ladies and gentlemen, and you in this audience have seen the change firsthand. The banking industry in India is historically one of the most stable systems globally, and that is despite the fact that we've seen significant global upheavals and headwinds. With the massive infrastructure of bank branches, ATMs, rural and urban areas today see a coverage of almost 100% across the length and breadth of this country. In fact, the total bank deposit stands at over 175 trillion rupees, or almost 68% of the GDP. The good news, gross non-performing assets of scheduled commercial banks continues to see a downward trend, declining to a 10-year low of 3.9% in the month of March for 2023. At the same time, we are also in the midst of a fintech revolution. India has the highest fintech adoption rate of 87%, which is significantly higher than the global average of 64%. Banks are at the heart of any economy. Banks grow the economy, and as the economy grows, the banking sector grows as well. Some of the stalwarts of the country's largest financial companies, the financial ecosystem, join us this evening to share their ideas and experiences, to share why one should be banking on the Indian economy and the Indian banking system. We will, of course, see plenty of dialogue and conversation on how India can navigate her way to the $5 trillion mark and beyond. So once again, ladies and gentlemen, on behalf of the entire CNBC-TV18 team, I would like to thank you all for joining us here for the first edition of the Banking Transformation Summit. We hope to make this a marquee annual event where we will see conversation and dialogue about India's financial sector take shape and drive change. Once again, thank you very, very much for being here this evening.
All right, we now have a very special fireside chat called Equipping a New India. A visionary whose name resonates through the financial corridors of our nation. He has not only propelled his institution to new heights, but he has also left an indelible mark on the entire banking industry. Please welcome on stage with a huge round of applause, Uday Kotak.
Mr. Kotak, thank you so much for joining us here as our inaugural speaker for the inaugural edition of the CNBC-TV18 Banking Summit. It is indeed a pleasure to have you here today. Let me talk to you about the moonshot opportunity for India's banking sector. You've seen the financial services sector evolve since the time that you took charge, in a sense, of an NBFC and then, of course, the bank in 2003. From your vantage point today, what could be the moonshot moment for India's financial services sector?
I think if I look back and then look forward, India has come a long way. In the 90s, my biggest concern was the export of the Indian capital markets. That we had a flurry of issuances of Indian companies listing at Luxembourg. And it bothered me a lot that Indian companies were listing in a completely unknown exchange with virtually no trading, but companies preferred that to public issuances. From there to now say that we have one of the most active markets, probably highest in terms of number of transactions, to any global player anywhere in the world being able to trade on Indian exchanges, it's a huge step forward. The financial sector should be the engine which supports India's aspiration. And I'm looking forward to India becoming a 30 trillion economy by 2047. And what does it take for us to get there, and what is the role of the financial sector as we go into that journey?
You know, since you're talking about ambition and aspiration, let me ask you about the appetite of the financial sector. We'll talk about 30 trillion later, but let's talk about 5 trillion because that is the next milestone that we're hoping to clock. In the journey to 5 trillion, do you believe that both in terms of capital as well as in terms of appetite, the financial sector has enough of both?
I think the financial sector is much stronger today than I've seen it. And if we started it, say, if we looked at the first part when COVID really hit us, most of us didn't know what was happening. From there to where we are, I think we've made a significant progress. I think we are actually in a very good shape. The balance sheets of companies are healthy. The balance sheets of banks are very healthy. Capital adequacy is in good shape. And this is the time for India to, while managing risk, really scale up in its aspiration for building new capacities and new capabilities in the financial sector.
What do you believe you foresee for the banking sector specifically? And will you continue to play consolidator, a role that you have played previously?
See, I think don't expect, especially in the public sector, anything major till 2024 middle. But beyond that, I mean, my view is maybe we need 4 or 5 large public sector banks. And beyond that, it should be completely open for consolidation within banking.
Thank you very much for joining us here this evening. We wish you the very best of luck and appreciate your time. Thank you very much.
Nucleus Software presents CNBC-TV18 Banking Transformation Summit in association with SPAN Communications.
It is now time for the first panel of the day, $5 trillion economy and beyond, ambition to reality. India has now come out of the last economic down cycle as the GNPAs in the banking system have bottomed out to 24% of gross advances. To discuss how extensive use of technology could lead to better credit evaluation, commensurate governance, and how proactive monitoring can help reduce NPA formation, may I please invite Lata Venkatesh, Executive Editor, CNBC-TV18, to please come up on the stage for moderating this session. May I also invite her fellow panelists, Mr. C.S. Shetty, MD, International Banking, Global Markets and Technology, State Bank of India. Put your hands together for Shyam Srinivasan, MD and CEO, Federal Bank. Prashant Kumar, MD and CEO, Yes Bank. And Mr. Ashu Kullar, CEO, Citibank, India.
Mr. Sethi, you actually represent, I think, 1/3 of the banking system. So the first question, or I think the brunt of the grilling will go to you. For starters, a big challenge is going to be digital. And I think a previous banker, the Citibank head in the US, described it well when he said, I'm basically a technology company with a banking license now. It's going to get as technology as that. Now, this is where the Google Pays and phone pays become a very big challenge. In practically a year or two, they've taken away a large part of the game. What do you think is the answer to ensure that it doesn't happen again? But more importantly, how does the banking system reply to this challenge?
I think when we talk about the big techs in the financial services space, we are essentially talking about the payments, right? They're not yet into other areas of banking. That may not be far away. We have to be prepared for that. Obviously, I think many of us have missed out on the payment space. We missed the bus. But today, if you see in terms of the volumes, banks like SBI, as a primary remitter bank, we handle huge amount of transactions. While the intermediaries like TPAPs, what we call third-party payment application providers like Google Pay and all, of course, are the major participants in this. So what is required to be done? I think it's no point in actually revisiting on the payment space. Payment space is highly commoditized.
Do you lose data because it goes away to a Google or a PhonePe?
So I think even as a remitter bank and the receiving bank, if you really talk about the data and our ability to utilize the data for building any models, it is still with the banks. That's what I feel. I think while the information which is flowing through the payment application providers are significant, if we have right analytical models, we have the data both as a remitter as well as receiving bank.
I mean, this could be just the first chapter or the first attack. Is it possible that even lending could come more easily to the Amazons or the Googles or even local companies? Do you think banks will be able to first save their backbone before they start building India?
No, I think we should not see like in terms of somebody growing at the expense of others. Okay. I think we need to see in terms of there is a huge opportunity in the financial sector. Fundamentally, we see like fintechs and the NBFCs, they are able to grow because banks have not been able to take care of 1.4 billion population. Okay. And because of the kind of framework under which they are situated, the cost structure and other. I think what we need to actually encourage that if there are players who can use the technology and reach out to such a large population, how we can be partner in this.
Fine. So both of you feel confident that the fintechs are not taking away your business. Shyam, you think banks are safe? I mean, before I ask what banks can do for the country, I'm asking for banking survival itself. Do you think that banks don't have to worry about fintechs? RBI is there after all.
I don't believe it's a matter of threat or survival or any such thing. First, please understand the revenue pools where they are sitting, right? There's lending revenue pools, there's transaction data revenue pools, and there is liability or deposit revenue pools. So by the fact that an intermediary or a payment company has the access to transaction and payments doesn't automatically mean that they are conquering all the revenue pools.
So, well, all of you are confident that fintechs are not taking away banks' business, that they are merely enablers in a space where you anyway don't want to be. That's fine. Ashu, do you think as banks intermediate India into a 5 trillion or a 10 trillion economy, do you think one of the biggest challenges is manpower?
I actually see it as an opportunity. In fact, the whole world is looking upon India as a talent source. And I think the whole...
That will make your challenge even worse, wouldn't it?
Yeah, there is competition, of course, right? But the point I was trying to make is I think some of the attrition rates have gone up and down depending on the competition from some of the tech players. But that is now moderating. At least the numbers this year are far, they're more like 10 to 12%. There may be certain segments where you see more. That obviously puts more pressure on banks to be competitive in terms of, what growth opportunities, what compensation. And it's not only compensation, by the way, it's what culture you give them. But I think, again, we have to keep it in perspective, and that's where I'm coming back. I think the talent pool availability in India in terms of size and quality is a great asset to India. Now, yes, would you be competing with more players? Absolutely.
India is still a seriously underbanked country. I mean, for all the Jan Dhan accounts that we have, it is still only an account, and even that, I think, is what, 80% or 85%. And over there, it's not as if everyone has credit. So, Mr. Sethi, to start with you on that, do you think banks have the wherewithal? Or if you want to expand it to the financial system, banks plus MFIs plus NBFCs plus fintechs, are you geared as we go towards a 5 trillion and a 10 trillion economy to service the last man in terms of loans?
Yeah, I think it cannot be done only by the mainstream banks. That is established because one is, of course, the cost structure, and number two is that the last mile connectivity is still an issue. Despite having the largest branch network, we still feel that we are not able to really reach the. So it's a combination of the mainstream banks with capital providers, and then you have NBFCs, MFIs. I think the whole ecosystem has to work.
You want to add to that, Mr. Kumar? Do you think retail banking is set to take off in a big way? I mean, everybody is in retail, but there is still a large unserviced category which needs to be financed if we have to reach 10 trillion with all guns blazing.
No, I think as a system, like what Mr. Shetty is saying, if everybody together is moving in that direction, I think it is still some time away. Even if we see like banks, NBFCs and MFIs, I think it's a very large country and such population. But I think we are moving in the right direction.
Okay.
With the use of technology, especially by even the MFIs and the Fintechs and the NBFCs. And then coming out with the products, coming out in terms of using the analytics. Because ultimately, giving the loan is the easiest thing. Getting the loan back is something which is important. So I think once we give a loan and everybody understand that we would be able to recover it, I think it is good for both customer as well as for the banks.
Okay. To Shyam, I'm going to put the question on its head. Shyam, you know, if we're going great guns as far as retail growth is concerned, banks are moving from probably 35, 40% public sector banks, retail, to now well over 50, some of them even 60, 65. And private sector banks are already at 65% retail credit. What if the cycle turns? Are we, you know, unsecured credit, I think already the Reserve Bank has raised that red flag. One economic downturn can lead to a lot of issues in terms of collecting. As Mr. Kumar says, collecting is always more difficult than giving. Do you think we are prepared for that?
I think, see, will there be some cycles? Absolutely, yes. All right. Is that cycle upon us right now? I don't believe so. Second, even if the cycle were to arise, we must understand the level of bad cannot be what it was in the past, only because of the reasons we spoke a while ago in terms of the architecture of the ecosystem of banking today is materially different than it ever was. If you see in the recent past, the unsecured behavior popping up to some extent, it's not the existing customers of banks that are causing this problem. It could be the exuberant lending at the bottom end whom we are trying to bring it into the system. And there's a good chance that they are repairing their credit history once the collection process is upon them.
Thank you very much, gentlemen.
All right, ladies and gentlemen, we now move on to another fireside chat for the evening on the topic, Bridging the Gap, Transforming to New Age Digital Lending. And to moderate this session, may I please invite Rima Tendulkar, Editor, IT and Telecom, CNBC-TV18. And may I also introduce you to our guest. With a career marked by innovation and deep commitment to advancing the financial sector, he stands as the driving force behind Nucleus Software. Please put your hands together for founder and MD, Nucleus Software, Vishnu R. Dusad.
Mr. Dusad, you know, over the past few hours, we've all been brainstorming. How do we get India to achieve that $5 trillion economy? I think we're currently a $3.5 trillion economy. Banks, fintechs, all the financial institutions are going to be the fundamental pillars, and technology will be the enabler. So first, very quickly, can you tell us over the past 3 decades, how has Nucleus Software been driving the transformation of the financial sector in India?
Making financial services access easy and enriching has been our vision for decades now. As part of that vision, we've been trying to make sure that we create a solution which runs as an operating system for retail lending. And thanks to the solution that we have been working on for now 3 decades, I'm very proud to say that 40 lakh crores worth of retail assets, they are originated, serviced, and collected using our platform.
40 lakh crore of retail assets. Wow. And that would be 50% plus market share in India?
Absolutely, absolutely.
40 lakh crore of retail assets. So the question is, what is next? What can legacy banks do to transform? What is next? What are the solutions, the technology solutions that you're working on?
I think one of the core requirements for any legacy platform owner, legacy player in the lending industry is to make sure that the top management understands this part extremely well. The changes, the demands are changing at a very rapid pace, and unless the top management itself is convinced of this reality, their ability to respond to the changes would be very, very limited. And that is what has been happening. It's only when you have a very flexible platform, only when you are ready to do a meaningful change management, that you would be able to transform yourself to meet the challenges of this new reality. The youth, that 15 to 18 years old youth that we talked about, their expectations from your app are going to be of a different caliber.
What are they expecting now?
User experience, usability, instantaneous gratification. These are some of the basic expectations, and absolutely minimal involvement in terms of documentation and so on. So while some of the players have gone ahead and made loans in 10 seconds possible for existing customers, I think rest of the players, rest of the consumers are also expecting the same thing within seconds. So that is the level of expectation that we are talking about.
It's been absolutely incredible to know how Nucleus Software has been pioneering the transformation of the banking sector and our financial sector for over 3 decades now, and we are most interested to know what comes next. Thank you very much, sir.
Thank you, Rima.
Nucleus Software presents CNBC-TV18 Banking Transformation Summit in association with SPAN Communications.
And now we are commencing our fireside chat on banking on Indian economy. And ladies and gentlemen, put your hands together for Shireen Ban and Mr. K.V. Kotak.
At this point in time, I know that you continue to be extremely bullish about the strength of the Indian economy, the role and relevance of the Indian economy in the global order. You know, you've often spoken about the fact that you're confident that India will be able to double its GDP over the next 9 to 10 years. Just in light of what we've seen happen in the past year itself, what are you most bullish on?
Yeah, I think several factors which makes one bullish. I look at 2 data points which are really beyond my conceptualization, I would say. One was the consumption of data, what has happened in the last 5 years. 5 years back, I could not have looked at the Indian data scenario and said that we would be the largest consumers of data in the world and be at the lowest price point. That's one. Second, even 4 years back, I would not have dared to say that we will have the largest number of daily digital transactions in our country, of any country. And you know, there are large countries our size there who were ahead of us on both metrics. And we could actually take a step beyond, as it were. I think that, to me, adds to several other things that are building up. And again, creates opportunities, creates aspirations, and so on. So there's a virtuous cycle that is in motion.
You know, speaking of this virtuous cycle, let me address the first point that you spoke of, and that is what we've seen as far as data consumption is concerned. You're absolutely right. We've seen data consumption go through the roof on the back of the fact that we've got the lowest prices for data anywhere in the world. But specifically from a financial sector perspective, while it opens up opportunities, it also means significant challenges, especially for the incumbents. You cannot continue to believe that you enjoy the regulatory moat because technology is going to be the big disruptor. How do you see that playing out? How worried would you be for incumbents at this point in time?
I would be terribly worried. If you look back again 20 years, there have been maybe 3 inflection points in technology as far as everyone, but particularly banks are concerned. In India, it was the late 90s when we could not afford a mainframe, so we migrated to smaller boxes, maybe a Sun box and an IBM box. And then we brought in technology into everything that we did.
Okay. That's as far as technology is concerned. But since you talked about the aspirational India and you talked about meeting the needs of this aspirational India with the hope of being able to double the economy, what about the appetite of the banking sector? What would you like to see change there? What kind of evolution will we now have to see? Where are we in that next leg of evolution to be able to meet the financing needs of the kind that we're speaking of?
We need long-term funding, particularly for infrastructure. The banks will have to think deep on this because you cannot really assume that term transformation will always work. And the banks typically are with the, 1 year tenor, 1.5 year tenor, depending on the bank, is their maturity profile of deposits. So you can't lend, say, 5, 7.5, 10-year money, even though you reset the interest rate. Somewhere you will end up running an interest rate risk. So banks will moderate their lending to long infrastructure projects. The good news is you have got other savings modes that are coming up. So whether it's through pension, insurance, et al., which are, their needs are for longer term assets. So an infrastructure company could actually issue longer dated products. And that would be something that would be picked up by insurance and pension funds. So I think a virtual cycle can be built as we go along. Then when you look at the banks have an important role. Banks would clearly fund what we call, in our project financing days, the shorter term needs of not the short term working capital needs, but the initial 2-3 year need. Yes, you need to have skills in terms of analyzing and assessing implementation risk, but this is something which matches the tenor of funds they have. Probably could be a higher priced instrument, so they make money allowing for risk that could be there. And later on, sell down could happen, and this could go to people who have longer appetites. And over the last, almost 20 years, banks have become, I would say, now experts at lending to the retail customer. So I would think credit costs will come under, very much under what it was in the past, both for corporate India and retail India. And that's what banks will lend and banks will thrive. And infrastructure, the longer end will be met through the capital market process.
Big round of applause for the long-term India bull. And of course, it's been an absolute pleasure.
Fintech ecosystem is rapidly growing, altering the role of banks with the advancement of technology. And to discuss more on the collaboration between banks and fintechs, may I please invite Ritu Singh, Associate Editor, CNBC-TV18, to moderate this session. Ritu.
Thank you all very much for being here again. And Shinjini, I'll start with you about the role of fintechs itself. Traditionally you had the banking model, the gaps that they couldn't fill was filled by NBFCs. Further down the line, you had MFIs, payment banks, and then technology encompasses everything. Are fintechs in the future going to remain these ancillaries, so to speak? Or do you think they can be the disruptors we thought they'd be when they emerged onto the space, but didn't really get that far?
So let me start out by saying that you contextualize this in the context of lending, because you took the example of largely NBFCs and banks. And of course, NBFCs are also non-lending NBFCs. But one of the advantages in the age of new technology, which is the platform economy or the digital or the mobile or whatever, where we are living now, is this ability to bring together a lot of the financial products, which has never been an ability that the financial system has had. So because traditionally financial system has been built, because distribution channels had to be built manually, so they were typically created vertical by vertical. I mean, I ran a consumer bank, and we would, even as late as now, we would have verticals that were wealth, credit cards, lending, secure lending, like that, right? But what this platform provides us, enables us to do is to bring all of this together.
Well, I think the fintechs are quite hopeful. If you talk about hope, just look at the payment aggregator license applications. I think some 180, 200 companies have applied to be payment aggregators. Is there really space for a 201st player to now come into the ecosystem, in a way be able to grab a larger market share? Or do you think the space itself is too commoditized by now at this point of time?
I think from an industry perspective, there is hope that at some point, as market or the product stabilizes, revenue or factor on that can come back. But in the short run, yes, fintechs are looking at other divergent ways to where they can make revenue and profits. My views on this topic are fairly well known. I think when we talk of technology-based companies, whether it's India or anywhere in the world, there's never space for more than 10. There is a process of evolution where hundreds compete to be in the 10. It's just a question of who survives to be in the top 10.
So who will survive? Who will be the top 10 in the current crop of players that we have?
Time will tell. If we all had that crystal ball, the remaining 190 would never participate, right?
Okay, since you're not giving us that list, Sucharita, let me come to you. First, we started with fintechs, taking over some of the banking operations, and we said they'll collaborate, and now we're talking of them as ancillaries. Where do you stand on this particular matter, and do you think there are gaps that fintechs are able to fill, which even in the future, as banks become more and more tech first, they'll probably not be able to get into?
Just the way our financial services system is built, it's built like product manufacturers. So in some sense, customers need solutions, holistic solutions. So for example, in India, 90% of India actually works in the informal sector, which has tremendous volatility of both income as well as expenses, as much as 45–50%. And therefore, by definition, you need to combine savings and credit, for example. Now, what fintechs can do is really understand the customer, what the customer needs, and bring the right set of products together. So yes, combine the products, but not like a supermarket, much more like a curator.
Combine the products, but not like a supermarket. Chetna, let me ask you, fintechs don't have the legacy problems of traditional banks. They're empowered with a whole lot of data that they could use to make lending where perhaps traditional players cannot. Why is it that we still see, as we were talking about before, fintechs even today solving for the problem of that 1 or that 10% of the population not really going down to the last mile, with a few exceptions, of course?
So let me say that, what fintechs are not doing it, or instead of saying that, I feel very strongly that on the supply side, where are we failing to listen to people? And for bringing that, I would just like to narrate that how actually the fintechs or the banks or the financial sector can learn from the people. And I would just like to narrate how Mandeshi Bank, or what were the learnings we had from the women. I mean, we keep on talking about the borrowings and lending to the people, and even when we talk about the financial inclusion, we talk about the lending. But sometimes you see that people, I mean, in our case, when nearly 2.5 decades back, everyone would think that, we need to lend poor women, right? But with me, it was like women came forward and they said, I don't. I mean, Kantabai, who was a street vendor, she said that I don't want loan, I want to do savings. And banks were not ready to provide that product which will allow her to save 3 rupees or 5 rupees a day. And she said, I went to different banks and banks denied opening the account because she's not an affordable client. And so then you said that, okay, If banks are not opening the account, why not start a bank for women like Kantabai who want to save 5 or 10 rupees a day? And that's how we applied for the banking license. Of course, the license was denied by Reserve Bank of India because these promoting members coming with a community capital, they couldn't read and write. So the bank, RBI said that we cannot issue the license. Now the whole thing is that community is coming with the capital, not with the investors' capital. We want to save. And so then women said that, okay, we will go to Reserve Bank of India. And you know what they said? They said we cannot read and write, but we can count. Ask us to calculate the interest of any principal amount. If we fail, don't issue the license. But tell your officers to do it without calculator and see who can calculate faster. Needless to say, we got the banking license.
But Rishi, thank you for patiently waiting by. And I wanted to keep this for the last because, you know, when payment bank licenses were given in 2015, there was so much jubilation about the kind of inclusion that they would bring about and what kind of transformational power they would have. You know, just 8 years down the line, we barely have 4 or 5 of those 11 players still in business. And I know you're constrained in the fact that you cannot give out loans, that a bulk of your deposits have to be invested in government securities. But, you know, how do you see this business model evolving? Is it sustainable? Do you think in future we will not have more payment banks? Or do you think at some point you'll have to look at lending to live and to continue to survive?
Coming to this previous point, out of 200 payment aggregators, 10 will survive. In payments bank case, out of 10, only 5 have survived. So numbers actually don't really make any sense of it. But more importantly is, how do you make the business model out of it? So as Kamath Saab also said that when you need to do business, you need to bring the cost down to a level that it becomes near zero. I think the opportunity in front of us, whether it's a payments bank or any other bank, is how technology will enable us to bring the cost to near zero. And that is really the model in which we build up the payments bank. Rather than going in the conventional manner of setting up branches or ATMs or a huge cost on the entire field force and everything else, we enable a lot of merchants. We now have 14 lakh plus merchants who enable banking at the doorstep. So the entire technology enablement through the payments bank ecosystem has actually achieved the financial inclusion mandate for which the payments bank were set.
All right. Thank you very much for sharing those thoughts. Chetna, Sucharita, Shinjini, Srinivasu, Rishi, all of you, thank you very much for your time here. We're going to conclude it on that note. And thank you all for being a wonderful audience.
Nucleus Software presents CNBC-TV18 Banking Transformation Summit in association with SPAN Communications.
And now, ladies and gentlemen, we have the final panel discussion for the day on the topic, the new regime for NBFCs building for the future. Well, the landscape for non-banking financial companies has undergone significant changes in recent times, largely driven by regulatory reforms, evolving market dynamics, and emerging risks. With the aim to explore the new regime for NBFCs and shed light on strategies and measures required to navigate this changing landscape successfully, may I please invite Prashant Nair, Deputy Executive Editor, CNBC-TV18, to please come up on stage to moderate this session.
We've talked about banks, we've talked about sort of fintechs, but I think, you know, the one engine for lending which we've not spoken about is NBFCs, and that's what we intend to do here. You know, one of the things which we used to talk about is the regulatory arbitrage between NBFCs and banks. Has that kind of gone away now for NBFCs? The Reserve Bank of India, the regulator, has tightened norms for NBFCs to be at par with banks, especially on NPA recognition, asset quality, etc. So I want to sort of take up that first. Mr. Iyer, I want to start by asking you, what is your view?
So I think, all through the day you would have had panel where you would have heard what they cannot do. And NBFC exactly do what others say they cannot do, right? And when we do that, obviously you will be regulated a little more than what was required. But I think it's always been a misnomer, I guess, that when people say, oh, the arbitrage is kind of shrunk and whatever else. And we've been here in this industry for too long. And I'm not too sure that there were too many areas of gap that we were benefited by.
Mr. Revankar, is this sort of bringing regulation at par with banks? Is it serving the need of what NBFCs sort of came into being in the first place, or is it a bit of a drag?
The way I look at it is, we became NBFC by choice. We did not look at arbitrage to become NBFC. So, if at all we wanted to be bank, probably would have applied for a bank in the first instance itself. We chose a segment, we chose a product, we chose a service, we chose customers, and then we became what we are. So I don't think there is anything disadvantage to NBFC as of now. And all the NBFC have proved that they are able to manage the increased regulation quite well and perform well. So I don't really see disadvantage there.
Would I get the same answer if I spoke to smaller NBFCs? Because, I mean, all of you are... So let me actually just bring Alok in. Alok, of course, heads Muthoot Home Finance. Would you concur, or you think...
Yes, see, overall, as my co-panelist said, the regulator always works for strengthening the sector. But then there is also a target customer, and what was the objective of the company when it was established to service whom. Now, as you rightly said, the very focus and existence of NBFC was brought about to cater to a customer who would normally not get a lending from a bank. And yes, today we are measured at par with the bank customers who's probably, Cat A plus salaried employee getting a bank credit of ₹1 lakh, his ability to repay and the uncertainties which my self-employed, unorganized customer having the willingness to repay but may not have the financial discipline to repay faces are totally different. So to that extent, customer segment is different, realities at the bottom are different. But yes, NBFCs have managed to endure that.
Prashant, if I may, I'll add one sort of analogy to this, which I think is somewhat relevant. It is natural that when you grow older, bigger, and become a bigger part of the system, that restrictions will come in, right? For individual players, that might feel a little bit painful, but it's a natural evolution of the system, and without that, it'll be kind of chaotic in the market. So while it is true that, yes, particularly for the larger NBFCs, the regulatory ecosystem looks more and more like banks, it is what it is, and you got to deal with it. It's good for the ecosystem.
And we need larger financial institutions if you are to be able to finance the needs of the economy, which will grow to 5 and then 10. It's a matter of time. So, I mean, just come in there in terms of how the regulatory landscape is, and if it is all working towards that, and what needs to be changed, if anything at all.
Now, first of all, I think we are all blessed to have such a mature regulator. The fact that the financial services industry is growing at this pace, it'll be wrong to say that, we are more restrictive. I think we should give credit to the regulator that we are growing at this pace. Tell me, in which other economy is financial services industry, the top players are growing at 25-30%. There is no such industry. So I think credit should go to the regulator, and it's fair that they get this credit. See, we should all know that there are spectrum of NBFCs and a spectrum of banks. If you look at the large NBFCs or HFCs, they are bigger than the top 5 banks, a lot of them. You will find some of the larger NBFCs competing for more prime customers than some of the banks. So it really depends on what stage of evolution you are. And every entity has to, find its right place and behave in that manner.
Thank you very much, all of you, Alok, Mr. Revankar, Mr. Iyer, Mr. Sabarwal, Jairam, thanks very much for joining in.
Nucleus Software presents CNBC-TV18 Banking Transformation Summit in association with SPAN Communications. Focus, ideate, innovate, enable.